This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Wednesday morning, middle of the week, and what a last 2 days we've had. 20,000 on the Nifty, and then yesterday. So quite a lot to discuss and kind of take forward from where we left off yesterday. Guys, morning.
Hi, good morning. Morning. I am trying my best with this, green shirt so that, the market can sort of perk up its mood. But it was quite damaging yesterday, the kind of mid-cap and small-cap fall that we saw. But before all of that, I mean, anyone excited about the iPhone 15 launch here?
Excited, but,
I was calculating.
Speechless.
I was calculating. I'm now 9 models behind the latest iPhone.
Oh, wow.
No, I'm just one.
So it's time to upgrade then, yeah? Okay, you know what I really like about the new iPhone is that it's lighter. It is going to have now, I think, titanium instead of stainless steel.
Yeah, I heard it's made of
lighter
stuff which is, used to make spaceships. I mean, rockets to send into space. I mean, apparently, that's the latest thing. Because it's lighter, exactly because of that.
It's much lighter, and I think, you hold your phone for so many hours through the day. Yeah. For an iPhone user like me, I don't mind switching if it's like much lighter.
No, I'm one level behind. I don't mind going 2 levels, 3 and 4, and then maybe I'll catch up with Vishal. But I just purchased the last one, so I will look forward to the launch, but I won't be on the buy side.
Okay, maybe soon. All right. But on the markets itself, things have been kind of sticky, especially in the broader markets, right?
It has. Yesterday was a bad day. And let's just actually start with that. I'll get to the Nifty, global markets, etc. But I think top of mind for people this morning is what next for the mid-cap and small-cap part of the market, which saw a first real crack of 2023. Actually, this is the largest single-day cut that we saw in the mid-cap and small-cap indices, right? Now, over 2 lakh crores in market capitalization wiped out in that space, in the mid and small cap space. As of day before yesterday, the total market cap for that space was about 60 lakh crores. You take a 3.5% cut, average cut across that AUM, and you're looking at a 2 lakh knock in the mid and small cap part of the market. And I'm not even counting lower down micro caps, etc., where perhaps there would be a lot more damage. I want to address this first up. There is talk that there was portfolio liquidation by a foreign fund, and that has caused a lot of damage, right? Without naming names, a foreign fund, there was one particular person at that fund who was running positions he should not have, maybe too aggressive. That person was let go, and then a lot of the underlying position had to be unwound and that kind of stuff. We did actually speak with a fair bit of people on the sell side and on the buy side, on the fund management side as well. And, it's very difficult to pinpoint exactly what kind of numbers somebody is running, especially in this sort of a situation. But I have to say this, that I saw some numbers being put out, which is $3 to $4 billion of portfolios up for liquidation, etc. That, to my mind, and from the conversations I've had, that seems extremely unlikely. We are talking about much smaller numbers in terms of this particular incident, which has happened at a foreign fund. So that is point number one. Actually, if you take a look at, yesterday's net figure, which was the FII net sell number, which was about 1,050 odd crores. It doesn't add up, right? If you had that kind of liquidation across the board from a single entity and that to an FII, it would have showed up. The numbers would have swelled up a little bit more, which was not the case. Actually, you could look at the gross number as well, and that will give you a similar kind of picture. That is not to say that, the bulk of the damage is because of this particular incident is done. It is possible that there perhaps is more selling and not everything got done in one single day. But that is what the point I want to make is it is just one of the factors, right, at the margin, which perhaps could led to incremental weakness yesterday. So, to my mind, perhaps we could see weakness for a few more days in the mid and small cap part of the market. But I think I said this yesterday while we were in that 3.5–4% fall, that maybe what we saw, the single day cuts that we saw, that perhaps is the worst that the market will see in this particular phase. I'm talking about the 4% cut of the small cap index. Will we see another 4% down day? If fingers crossed, I think unlikely. but we could see a few more days of weakness here. So the advice is very simple. I mean, if you're invested in mutual funds, if you and fund structures, etc., where there is a professional fund manager at the helm, hold on to those schemes, hold on to good quality stocks, etc. No problem. But if you are levered, and there is of course F&O on one side, there is also cash leverage. I mean, people have made money. Their sort of demat cash holdings have gone up quite a bit, and brokerages, etc., offer leverage on that, 2x, 3x leverage on that to buy stocks in the cash market as well. And that has become pretty large as well. So reduce all of that to manageable levels. I mean, that is the first thing. It's not just, I have to say that a lot of people, I mean, big investors, long-term investors, I know so many who also trade on the side, but the first thing they will all tell you is, during periods of volatility, etc., cut leverage, get out of positions you're uncomfortable with, you're not holding. This is not a single-day game, and you can always get back in when you feel more comfortable. So that's the advice here as far as the mid and small cap part of the market is concerned. Now, having said all of this, let's come to the global scene. I'll kind of wrap up with the Nifty, Bank Nifty levels. So overnight session was weak from the global perspective. The Nasdaq was down about 1.04%. S&P was down as well. The big headline is oil, right? I mean, oil prices last night inched up to almost $92 a barrel. And OPEC Plus basically saying that in the fourth quarter, global oil inventory deficit will be the highest they've seen in over 10 years. Now, that is quite something. Which, does it mean that there is more to go in oil? The consensus is no. But we'll have to watch because the price is telling you something else. The dollar index has been the other pain point. It got to about 104 point something. It's now at 105 point something. It's now at 104.5 or so. So that is the other indicator. This is looking a little more manageable, but oil is a big worry. I don't think one can sort of negate that. Now to advice for the broader market, and we've been kind of saying this for the last couple of days, perhaps, and so many people veterans who've come on the program have also said this, perhaps some move to large caps, incremental risky positions in the mid and small caps which have made you money so far, perhaps start to move some of that into the large cap space where there is a clear case also because of valuations, etc., which we can discuss later on. In the very near term, these are daily levels we put out. Nifty's first target, daily very near term, Nifty's first target, I would still say, and this is the same I put out yesterday as well, 19,350. That is the equality level of the previous last two moves, and it gets us to a number which is, 20,350, beg your pardon, not 90,350. We need to change that. Supports come in at 19,922 and 19,794. Bank Nifty resistance is yesterday's high. The high was 45,894, and supports for the Bank Nifty come in at 45,359 and 45,063. As well. So broader markets, I think, perhaps at least in the near term, in the medium term, the place to be. And, I would be very surprised if the large caps universe does not outperform after the huge outperformance from the mid and small cap over the last 3 or 4 months or so. Sonia.
Absolutely. So you summarized most of it. I just wanted to take a few points on board. One is, of course, the price action is crucial in the mid and small cap space, right? After the kind of damage that we saw yesterday. So perhaps the best thing to do would be to be a bit cautious in the mid and small cap space. Remember, it recorded its biggest single day fall of 2023. So that's that. There was a large FII sell figure as well. FII sold over 1,000 crores in the cash markets yesterday, while DI has bought about 259 crores or so. Now, everyone knows that, you should be slightly wary of mid and small caps, but I'm watching out for the Nifty Bank today because the macro data was quite positive. So the CPI data in August cooled down to 6.8% from 7.4% in July. It's still above the RBI's comfort zone, but nevertheless, cooling of inflation is something that will perhaps help the constituents from the Nifty Bank. So I'm watching out for that very closely. In the US markets, not too much happened really. So it was largely unchanged. In the US as well, the expectation is that the consumer price index numbers will be out. The CPI data will be out later today. So all eyes will be on that. In our own markets, in terms of individual stocks, there's been a lot of primary market action. So today you have RR Cable, the IPO that opens today. That's going to be an interesting one because the company has about 7% market share in the cable and wires industry, and it's seen a very good revenue growth. The top line compounded growth over the last 3 years has been in excess of 31%. So I'm watching out for this very closely. And of course, as we've been pointing out, crude continues to be a headwind. It hit that 10-month high of $92 a barrel. But the moot point is that the kind of sell-off that we saw yesterday, I don't think anyone on the street expected the ferocity of that. So it just goes to show that markets tend to be a leveler. You know, just when you get into this euphoric level, the market sort of comes back and brings you, keeps you in check. So I think it's better to just be a bit cautious in the broader market.
You know, Sonia, I'll put it in cricketing parlance, actually. It's like a batsman out there who is in fine form. But you need to hit every ball on its merit, right? You can't believe that every ball can go out of the park.
Absolutely.
And I think that's the reason why, in fact, with good reason, we saw a pullback in the mid and the small cap space. My only advice with regard to the mid and the small cap space is be careful of illiquid names, because we have seen a lot of those illiquid names move up. So that's one very, very important point. Watch the free float. And if you're seeing some of these stocks really surge up, maybe you want to clean up some part of your portfolio. Well, in terms of cues to track today, the uptrend is pretty much intact on the Nifty. Till that 19,850 odd mark does hold on. Yesterday was a good wake-up call, because otherwise you're coming in there, you're buying the Nifty and making money. Yesterday, yes, we recovered from the low point of the day, but it was a good wake-up call. It's going to be a bit of a test for the broader markets, though, because we saw yesterday there was some selling. I'd like to see what happens on the second day for the next few sessions, actually. And the Nifty IT index has been in a bull market of its own. But overnight, we had a lot of tech-related stocks, whether it was Oracle and other tech-related stocks that were under pressure. And the Nasdaq, after a while, underperformed. So it's going to be a test for both those two indices. The bulls, well, they lean to the Nifty Bank as the Nifty Bank plays out the weekly expiry. And that was showing signs that it wants to move higher, wants to move towards that 46,000 odd mark. What do the FIs do? They added long positions yet again. They added close to around 10,000 contracts. Now their long positioning moves to around 63% approximately. I'm just reading the options data, and the highest open interest on the call side is at around 20,100 call. On the put side, it's at around 19,900 put. The premium on both of them is around 30-35 rupees approximately. So there will be some kind of strategy that's playing out there, which brings us to the levels. Yesterday's high, that's going to be a near-term resistance level. 20,100, 20,150, since the highest open interest is at around the 20,100 call. So we'll keep an eye out on that mark. Support, though, as I said earlier, 19,850, you watch out for that level. The Nifty Bank, it plays out weekly expiry today. We have seen writing at around that 45,600 call. The premium yesterday went to around 250, and then it came down to around 100 rupees approximately. So that the level out there we're looking at is yesterday's high. Around 45,800, 46,000 appears as a bit of a congestion zone. The GIFT Nifty is suggesting we start off flattish. The Nifty is in an uptrend. Be a little bit wary in terms of what you're doing in the mid and the small cap space. That party is getting a little bit interrupted, at least for the time being.
Well, absolutely. Protect what you've made, protect and be in the right names. I mean, I think that's the only thing. Take a harder look at what has happened. Extremely important to do that at a point like this. We'll take a quick look at what's coming up here in the next half hour of the show before we go any further. So we've got Global Opinion coming in. Dean Kim and William O'Neill will join us. For that, we'll also have CNBC-TV18's list of top stocks for the day at about 8:30. Our market expert, Hemang Jani, will be joining in.
Okay, let's begin the day with some views coming in, shall we? After the kind of sell-off that we saw in the mid and small cap space, what do you do this morning? Mahesh Nandurkar of Jefferies says that the Jefferies Asia Forum 2023 in Hong Kong saw participation from a group of 15 companies from India, including 11 Nifty companies. The FPI level of excitement on India is high, though valuations are an issue. Cyclicals continue to see strong demand conditions across industrial and property sectors. Financials are seeing moderation in margins, but confident on asset quality. Consumer commentary is mixed, with rural likely to improve. In the IT sector, the overall demand is still weak. They remain overweight on cyclicals.
Okay, well, last evening we also got the August inflation data that came in at about 6.8% compared to the 7% estimate. Food inflation is also cooled to just below 10%, while industrial output accelerated. That's for the month of July, by the way, by 5.7%, which is above expectations. So, some of the macro kind of data points also coming through. Samiran Chakrabarti of Citi actually is weighing in, and he says that the CPI data would vindicate the Monetary Policy Committee's stance to look through the supply-side inflation shock. In the RBI's October meeting, he expects the MPC to acknowledge these positive developments and tone down its inflationary concerns. However, he adds it might be too early to signal any monetary easing given weather-related risks.
All right, let's also find out what's happening in the currency market, shall we? Yesterday it was a choppy day of trade, but the rupee has been hovering around that 83 to the dollar mark. For today, Abhishek Goenka of IFA Global says rupee has been under pressure on account of a weaker yuan, higher US Treasury yields and higher crude prices. However, the RBI has been intervening with a lot of intent, and that has deterred speculators from building speculative shorts in the currency market. The rupee has therefore been outperforming amidst broad dollar strength. He expects the rupee to trade sideways in the 82.40 to 83.70 range over the medium term.
Okay, well, on bonds, Neeraj Gambhir weighs in of Axis Bank weighs in by saying that bond yields hardened as US Treasury yields rose on strong economic data and higher crude oil prices following decision by Saudi Arabia and Russia to extend voluntary production cuts till the end of the year. However, news that RBI has inquired the market to assess the impact of allowing settlement of government securities on Euro calendar platform led to a rally in GSEX. Market remained cautious ahead of the India-US CPI prints. He expects the 10-year to trade between 7.18 to 7.28% this week.
Well, a lot of stock-specific action to track for you. Get to that in just a bit from now in our special Top 10 segment. But let me list out the stocks that we're looking at. Phoenix Mills, Dixon Technologies, Jai Bharat Maruti, KEC International, RITES, GE Power, Texmaco Rail, NTPC and L&T Finance. All of them on the back of positive news flow. While on the flip side, Greenply Industries, that's a stock that's likely to open up in the red.
Dean Kim is now joining us. He's head of global research product at William O'Neill and Company. Dean, good to have you with us here. Thank you very much for your time. You want to start with the 3.5–4% cuts in the small and mid-cap indices here in India yesterday. Technically, Dean, how are things looking after yesterday's session?
Yeah, I mean, we have pretty interesting action in India with small cap index declining over 3%. Many extended small caps broke below 21 and 50-day moving averages, and small caps rallied by 35% since establishing a low back in March. So it's not that surprising to see the market taking some profit. And as I spoke about last time when I was on, we would advise to keep a close eye on the chart. And particularly if it breaks the 50-day moving average and doesn't bounce from there, I think you ought to start trimming. Interestingly, I took a look at the constituents in the BSE, call it 4,800 stocks on there, and roughly 80% are considered small mid caps. And 10% of those is actually extended by about 50% above the 200-day moving average. So those are the names that are particularly vulnerable. And so we would advise to, keep a track of the charts and start to trim positions below the 50-day moving average.
Okay, start to trim positions below the 50-day moving average. But Dean, how are you feeling about the large caps? The market has been, trending higher, led by a lot of the large caps, whether it's in the IT space. Banks have come back in a big way. Some large caps like Reliance are also starting to participate. Where do your preferences lie now?
Yeah, I think in the large cap space, we find, ideas across different sectors. So that's good news. So the breadth is still very good. Tata Consultancy, for example, it just broke out from an early stage base. I think that one looks really interesting now. Cipla is another one. And then Varun Beverages, I think those two are looking really solid, as well as TVS Motor, KEI Industries, Solar Industries. So there are, good large cap names that are just breaking out from early stage basis. So I would focus on those.
Hi, Dean. Good morning. As a house, what kind of a view do you have on crude? For India, it's a bit of a worry. Everyone's been saying that crude now will fall. It's moved from around $65 just a few months ago, I think 6 months or so ago, to around $92 per barrel. That's a worrying sign, right? What's your view on crude?
Yeah, I mean, crude is steadily rising, it's all fabricated by the OPEC producing countries. So at some point they're going to ease off. We don't know when, but I don't see particularly huge spikes coming in terms of price. So that's good news because demand for crude across the globe is sort of tempered at the moment, particularly with China sort of struggling. And so I would expect to see crude kind of stabilize and come off in the future. It may take several months to do it, but I don't see any kind of negative shocks in that area.
So you said TCS and Cipla look like they are interesting bets at the moment. So that's the IT and the pharma space that you're veering towards. What about banks? They've also come back, although HDFC Bank has been underperforming, but the others are not too bad. Anything in that space that you like?
Yeah, I think Punjab National Bank stands out. That one just, broke out. And then you have banks like IndusInd Bank, ICICI. Those are all setting up. And we just need like one day of good, pretty good price performance and volume to get pretty excited by it. But they're getting ready to break out, in my opinion. Yeah.
Okay. So, Dean, just to circle back to the advice on mid and small caps, would you say that, say, for example, I'm looking at the mid-cap index, right? It's closed at, if you can have the chart up, it's closed at 40,170. Would you look at the 20-day simple moving average as a bit of a marker on the downside? That's at about 39,240 or so. You're not very far away.
Yeah.
Would you look at those, the 20-day for both the mid and small cap indices? Sorry, go on.
Yeah, that would provide support there. I think it's important to see that the index kind of bounce from that level. If the sell-off continues, perhaps on the back of worries about the oil price and depreciating rupee, that would make logical sense. Should that happen, I think the next level you would be looking at is the 50-day moving average. But I would particularly pay attention to those stocks that are way above the 200-day moving average.
Got it. All right, Dean, we leave it at that. Thanks a lot for joining in. Appreciate your thoughts. So that's the word coming in on the technicals of the market and how they are stacked up at the moment. Remember, there was a sharp slide that we saw in mid and small caps yesterday. But on the flip side, the good news has come in on the macro front. Inflation has eased in August to 6.8%, beating economists' estimates. But the reading is still above the RBI's tolerance band. Food inflation, though, has cooled off to single digits, while the industrial output accelerated 5.7%, which is above expectations. Lata is here with the fine print. Lata, tell us, are vegetables getting cheaper now?
Well, if you go by the inflation number, clearly the sting of food inflation is behind us. Actually, overall, that you must note that the data is inflation lower than expected, industrial output better than expected. You can't ask for a better set of macroeconomic data. So very good for any market. Of course, there are other impulses. So just to come back to the inflation number at 7.08 poll, 6.83 looks like a dream number. It's 60 basis points lower than what it was in the previous month of July, and largely contributed to by food prices, food inflation now in single digits. Of course, it's still 9.94. Almost at 10, but better than the 11.5%, which was in July, largely contributed by vegetables, as you say. The vegetable CPI is still 26% higher than last year. But last July, it was 37% higher than the previous month. So tomatoes have contributed in a big way. But I'll tell you the negative in the food inflation, or in fact the entire picture, is that cereals are still very high. Cereals is 11% higher, 11.85 higher than what it was a year ago. That's very bad. And pulses. Usually you substitute vegetables and pulses, I mean, at least in India. 13.04% pulses inflation will still be something that could give sleepless nights. And both these are sticky items. You need a whole season for it to be corrected. Unlike vegetables, which are short duration crops, this you have to wait for the next kharif for some of the crops to come. So this is not going to be a very easy decision for the Reserve Bank. Let me just come to the other positive elements. Fuel and light is just about 4% plus. And the impact of the LPG cylinder cut price will be seen only in September because it came in end August. Again, core inflation benign, 4.87 or thereabouts, so almost like last month. It's a little surprising. One expected it to come down to 4.8. It's like almost closer to 4.9, but that's not a big worry. All this will be positive for the Reserve Bank, but because cereals can be sticky and we still have worries of El Nino, low reservoir levels, and therefore potential of higher prices, continued higher cereal and pulses prices, I don't see the Reserve Bank relenting on liquidity. I mean, there's no question of a rate hike. It never was there. But, they will continue to keep liquidity tight. It doesn't look they're going to relent. Positive news coming from IIP at 5.7. Our poll was 5.2. And that makes, it's also kind of a 6-month high in terms of industrial output. So that's extremely positive in that you've got electricity at 8%. Already, power stocks are doing so well. And then you have, capital goods, not capital goods as much as infra goods coming in at close to 10%. So there is a lot of positives to take away. Consumer non-durables has come in at about 7.4%. That's largely because of a poor base. But all told, you have to say growth better than expected, inflation lower than expected. What more can markets ask?
Well, they can ask for US inflation later today also too.
Absolutely. All this, then it's water under the bridge if the US CPI comes with a ferocious number.
Yeah.
But the early indications
it should be
from the previous months is that hopefully it will behave itself.
But you still didn't tell us if our vegetables are going to be much cheaper from here on.
No, much. I am no soothsayer nor an agronomist. But I think the sting of tomatoes was out. I don't think vegetables is a complaint now.
So
but you try buying dals. Have you looked at the latest dal numbers? There's nothing less than 150 per kilo.
Okay.
200, I thought.
Expensive. 200 for tur dal.
So now,
and if you buy organic, I think he buys organic. Then it's 250.
And you can check out the prices on your new iPhone 15.
By the way, it's for 1.5 lakhs, I think, the iPhone 15 Pro Max.
Yeah.
So.
Wow. I mean,
so why complain
which
of
kidney to
250
sell? All right, Lata, thanks a lot for joining in.
Thank you.
There's at least some cheer, right, on the inflation front, so good for the markets. But let's step into a short break. On the other side of the break, we have plenty of stocks to talk about as we head into a brand new day of trade. More on that coming up. Welcome back. Our research team is standing by to give you the list of top 10 stocks as we begin the day. Surbhi joins in first up. She has a bunch of stocks on her radar. Surbhi, what are you looking at?
So the first one on my radar is Phoenix Mills. The company has incorporated a wholly owned subsidiary, Orcus Logistics and Industrial Parks Limited. Now this is interesting because they are diversifying their existing revenue streams and exploring synergies in related sectors such as logistics and warehousing business. The company had indicated before that they're going to do this, so this is going to be in a positive direction. The next is Dixon Tech. The company has incorporated a wholly owned subsidiary, Dixon Infotech Private Limited. Now this is to manufacture laptops, desktops and IoT devices. So again, in line with what the management has been guiding. Greenply Industries, the local workforce in West Africa has gone on a strike, which has led to a shutdown in operations in the company's step-down wholly owned subsidiaries. Now the company says that the situation is uncertain right now, which is why they cannot determine a financial impact as of now. But in FY23, 10% of the company's revenue came from the subsidiary, and they have a veneer capacity of 96,000 cubic meters. So we'll keep an eye out on that as well. And Jai Bharat Maruti, there's a board meet on 16th September to consider a fundraise.
Okay, all right. Thanks a lot for that, Surbhi. Well, let's hop across to Vivek. He's joining in to tell us about some more stocks in the news. Morning, Vivek.
Well, good morning. Quite a few stocks on the radar, a lot of news flow. The first on our list is KEC International. The company has updated the exchanges about various orders that it has received. So it has received orders in excess of 1,000 crores across various segments of its business. Now, in the civil segment, the company has received an order for a data center in Western India, also setting up a manufacturing facility for a global FMCG major in South India, is what the company says. Along with that, in the transmission and distribution segment too, they have received a couple of orders, a transmission line from an existing private client, as well as in the Americas, geography, they will be supplying towers as well as hardware. The other stock on our radar is RITES. Indian railway companies continue to see export opportunities. The company has signed a memorandum of understanding with an Angola firm. Now, this particular MOU is for number one, development and cooperation in railway development, infra development, as well as supply of rolling stock. The other stock on our radar is GE Power. The company has received a purchase order from Vedanta. This is for a combustion modification of a boiler. Size of the order is 25 crore and the order execution timeline is 14 months. Texmaco Rail 2 will be on the radar given the fact that the company board will be meeting on 15th, number one, to discuss fundraising proposal. The route that the company has chosen could either be the preferential issue, the QIP, or the private placement. And lastly, NTPC, some positive news flow coming in here as well. The company's Unit 1 of the 800 megawatt Telangana Super Thermal Critical Power Project has successfully completed the trial that they were doing, and the installed capacity of NTPC and NTPC Group now goes to 57 gigawatt as well as 73 gigawatt respectively.
Okay, thanks a lot for that. But Sudarshan is joining in. In fact, there is that L&T Finance block deal that's on our radar as well. Sudarshan, over to you.
The block deal data shows that CNBC-TV18 news break of L&T Fin block deals is confirmed. Bain Capital has sold 2.82% stake, which is of total 7 crore shares worth 910 crore at a price of rupees 130 per share. BNP Paribas was one of the buyers. It has bought 3.63 crore shares, that is 1.47% equity at rupees 130 per share. Post block deals, Bain Capital's stake will come down to 1.22% stake in L&T Fin. As of June this year, the holding of Bain Capital was 4.04% stake.
Okay, thanks a lot, Sudarshan, for that. Here's a quick recap of our top stocks. Stocks with positive news flow. There's Phoenix Mills, Dixon Tech, Jai Bharat Maruti, KEC International, RITES, GE Power, Texmaco Rail, NTPC and L&T Finance. While the only stocks with negative news flow today is Greenply Industries. But Ekta's joining in. She has a couple of brokerage notes to focus on for the day. Ekta, what are you looking at?
Thanks for that. Well, I'll start with CLSA on L&T. They have a buy rating and a target price of 3240. They are optimistic with the rising project inflow, highest ever backlog and improving execution. HSBC has written on Tata Chemicals. They have a buy with a target price of 1100 rupees. Soda ash prices in China have increased sharply. They believe the price increase in soda ash could be temporary and normalize soon. HSBC has written on M&M buy rating, target raised to 1800. The tractor business surprised positively this year. Underlying monsoon trends, however, are not encouraging. They see downside risk to the FY25 tractor growth. UBS has written on MCX, they have a buy rating, raised the target price to 2100. The tech transition is a key near-term trigger. They plan to complete it by September end. They've raised their EPS estimate by 26% in FY24 and 3 to 6% in FY25-26. Jefferies has written on Canfin, buy rating, target price of 970. No major issues were detected at other branches post a detailed review, so maybe there could be some positive momentum there. And Goldman Sachs has written on Sapphire Foods, buy rating, target price of 1800 rupees. They expect a potential recovery starting in Q3. Q2 is generally a seasonally weak quarter for the QSR sector.
All right, Ekta, thank you very much for that. So that is the list of stocks to watch out for. But commodities are in focus, right? Because of all what's happening in the oil markets. And Manisha is here with exactly that. Manisha, good morning. 92 on oil.
Oh, well, absolutely. 2% of gains overnight. We are up by 9% in last 1 month, and we're trading at a new 10-month highs as far as the crude oil prices go. And the expectations are that even as the crude is overbought with the kind of run-up that we've seen in last few sessions, it still has higher momentum. And the latest trigger clearly has been the OPEC report, which says that they are looking at stronger demand growth in 2023 and 24 as well. For 24, the demand growth estimate that they have put out is at 2.25 million barrels per day, which is on the higher side. And then there are supply concerns coming in from Saudi Arabia, from Libya, from Kazakhstan. So markets are factoring that in as well, with expectations that this could be yet another week where you could be looking at higher crude oil prices continuing.
Okay, that's the big headwind for our market. Let's take a quick break on that note. On the other side of the break, plenty of stocks to discuss. What do you do with mid and small caps after the fall yesterday? Hemang Jani joins in for some fundamental stock analysis. Stay tuned. Welcome back to Bazaar Morning Call. Hemang Jani is joining in now to tell us how to approach the markets. Hemang, thanks for being with us. You know, there was a sharp slide that we saw in mid and small caps yesterday, but what do you do now if you're holding on to these names, whether it's in railway, defense, sugar stocks, PSUs? Do you keep the faith or do you start booking profits?
Morning, Sonia. See, I think we've seen a very strong rally in the mid cap and the small cap stocks, and the index itself year till date is up about 32%. So while we are rejoicing this entire rally across the broader spectrum as you outlined, you do go through a little bit of corrections on the way because both in terms of valuations, in terms of liquidity chase. The kind of money which is moving into the small cap and mid cap oriented funds actually has doubled in the last 2 months. 45 billion rupees which was coming in since last 2 months, it has gone up to about 70 to 75 billion rupees. So sometimes when you have a situation where too much of liquidity is chasing some of these names and there's a momentum, so there is a retail frenzy, you do go through a little bit of consolidation, but I do not see this as some sort of a warning sign or a sense that this entire index is topped out, because I think in terms of numbers, in terms of fundamentals, things are looking good, and particularly the PSU names, railway, defense, etc. I think by and large, when you look at the numbers, both in terms of operating profit, order inflow, things are looking okay. So you might go through a bit of a correction, maybe 5%, 10%. Even at the index level, a 10% correction is not too much. But broadly, I don't see much of a concern at this point of time.
Not too much of concern. By the way, Hemang, there was also some talk that I think it was Kotak or somebody who kind of raised margin requirements yesterday. What's been happening at Motilal for retail clients? Has margin requirements, etc., gone up in the last few weeks, days? Just give us a sense.
Prashant, I think given the kind of move which is there in terms of the funding book across brokerage firms is actually rising. When you look at Angel, Motilal, and a couple of other retail brokerage firms, the margin funding book has grown anywhere from 20 to 30%. Mainly because of this frenzy, and I do not see a reason for any a concern as such, because the margin funding norms are being implemented, and there is a peak margin norms are in place. So I do not think that the margin part is an issue. But yes, at a brokerage level, if they don't want to exceed a certain exposure to certain category of stocks, that may be their own individual call.
I just had a follow-up to the point we were making earlier about some of these trending sectors doing well. Names like IRFC, IRCON, RVNL, and other railway stocks, they all fell about 10-11% yesterday. Are you advising caution at this point, or do you advise buying the dip?
Sonia, I think we will have to pick our own, bunch of stocks depending upon what kind of work and numbers one is really expecting. And when the stocks have fallen 10%, I think, many of them have actually gone up by anywhere from 50 to maybe 5x, So I think railway as a theme looks interesting when you look at something like a Titagar, IRCON, something like the entire BEML, let's say, the ecosystem kind of play which is there. I don't think there is too much of a concern, but typically because of the high beta nature of these names, you may go through a little bit of, let's say, 2, 3, 4 days kind of a correction of 10, 15%. But I would definitely be looking to add into some of these names.
All right. Hi, Hemang. Good morning. GMR Power, they have won an LOA for a smart metering project worth around 2,500 crores odd. Well, this smart metering theme has really played out very, very well if you got in early. But how do you play it from here on, Hemang? I mean, Genius Power, the stock is re-rated big time. You have a couple of others that have some exposure. GMR Power as well. I think maybe a couple of months or so ago, it was at 23, 24 rupees. Now it's at around 35 rupees, if I'm not mistaken. Your view?
It's another, reform-oriented theme where because of the kind of pace at which the smart metering projects and the awards are being given to Genius Power and a couple of other companies, there is some sort of, expectation built up. I think the stocks have done pretty well. But what we must understand, Nigel, is that the kind of business potential or the opportunity that exists for some of these companies is large. So I think if you go through a small correction here and there, I think Genus Power definitely presents a great opportunity because only about 7 to 8% of the total market, the metering orders have been awarded. So there's a big runway ahead.
Okay, there's a big runway ahead. I also wanted your thoughts on what's happening with the auto sector because, yesterday there was so much talk about, first Nitin Gadkari made some comments about that additional GST on diesel cars and then he sort of said that, no, it's not happening. But give and take everything, if diesel is phased out, if diesel cars are additionally taxed, then one big beneficiary will be Maruti because they have no diesel cars in their portfolio. So definitely, it will be a big boost for them. Any thoughts on how to approach this space now?
Sonia, if you just recollect, maybe a couple of years back, people were a little worried about the disruption that EV could cause to the internal combustion engines. But the fact of the matter is that the typical companies have done exceptionally well, be it Mahindra, Maruti, and some of the two-wheeler companies as well. So I think this whole debate about some sort of additional tax being put or Mr. Nitin Gadkari making a statement that they need to really phase out diesel engines. I think the fact of the matter is that it will take some time and I don't think we should worry too much about it at this point of time. Yes, as a tactical opportunity, whenever you have some extra cess or diesel, maybe it may benefit Maruti to some extent, but broadly, I'm not reading too much into this. I think the auto story in terms of the CV part is playing out extremely well. PV also by and large is doing well. Two-wheeler is where there's a bit of an issue in terms of growth, but overall it looks quite compelling.
Okay, all right. Hemang, stay with us because we'll take a quick commercial break here. But before we do that, let me quickly tell you what's lined up here over the next half hour of the show. Anu joins in with a quick look at the trade setup. Post that, we'll get you the top stock picks of the day with our technical and F&O experts. And at 9:10 a.m. this morning, Nimesh will be here with the standout brokerage report of the day. We'll also focus on the CNBC-TV18 stock board and put the spotlight on the stocks which should be in momentum one way or the other based on news flow. Stay with us.
Welcome back. Hope you're having a good morning. Well, for starters, the gift nifty suggesting that it will likely to have a flattish to a mildly positive start. But Anuj joins us in the studio as well to tell us how is he reading trade setup. Hey Anuj, morning.
Morning, Nigel. Well, yesterday was a bit of a rude shock for the mid-caps, right? We discussed this in the morning that the valuations are looking slightly stressed. And of course, yesterday we had that 3% fall on the index itself. What that's done is it's, made you sort of sit up and take note of your portfolio. And, you want to cut out the leverage and see how things are moving over the next few days, see the price action in the broader market. Now, it's possible that yesterday was a one-off and the market moves on. That's a possibility as well. And once stability comes, perhaps the mid-caps will bounce back equally strongly. That's also a possibility, but let that happen, and then we take a view. Of course, the inflation data is very positive, so the bank nifty today will be in focus. Inflation cooling to 6.8% versus 7.4%, still above the comfort zone, of course, but the cool-off is important. And I was reading a couple of notes. Some economists see RBI cutting rates in December if Fed pauses, and in that case, today's data from the US will be very crucial, the inflation data. The Nifty's basic texture is still buy on dips. The first support is at 19,914, which is yesterday's low. And the bigger support is 19,840, which is the 5-day exponential moving average, and also based on the options data. The resistance zone is, of course, yesterday's high, and the options base of 20,080 to 20,120. And the bank nifty is in focus today because it's the weekly expiry as well, plus it will be reacting to the inflation data. And it should get some help. Remember, this index is still about 800, 850 points away from its previous all-time high. The first support here is 45,322, and the bigger support is 45,200. The upside resistance comes in at 45,646 and 45,893. Okay, thanks a lot, Anuj, for that. So we'll keep an eye out on the markets as well as the bank nifty. But let's get Mitesh Thakkar and Sudarshan Sukhani on board. Gentlemen, morning. Sudarshan, what do you do now when the mid and small caps are falling so rapidly? If you do have positions here, if you've made profits, is this the time to book your profits, or do you think that you should buy the dip?
Yeah, good morning. Since I primarily track large caps, I'll have to base my view on the Nifty. Yesterday, I had suggested that we have reached a round figure level, and the markets and new highs both, and the markets consolidate at that around those levels. That is my view for the Nifty. The mid cap and or rather the small cap story is probably over for the time being. If the Nifty is going to face consolidation, I don't think this remarkable rally in small caps will continue. The right approach is to take profits. Every time this cycle begins, people stick to the small caps and then they see a bearish downturn and then they can't sell. So don't make that mistake. Just take your profits for small caps, and for the Nifty, buy on very sharp dips.
Got it. All right, Sudarshan, thanks for that view. Well, in fact, yesterday there were only two indices that were really in the green. One was the IT space, and the other one was the pharma that managed to eke out some gains as well. Coming across to you, Mitesh. Mitesh, what is your view on the index?
Morning, Nigel. I think on the index, nothing much has changed, to be very honest. Nifty hasn't turned very weak, as Sudarshan was also highlighting. The weakness was there in the small and the mid-cap indices. So I think there, looking at the rally, if you look at the last 6 months of price movement, there I think profit booking might still continue. There is about 4, 5, 6% kind of an index-based downside left, so stocks could fall a bit more. But on the Nifty, till we break 19,850, I think we'll maintain a positive bias. Though I think, we have booked out long positions. But therefore, I think declines towards 19,900, 920 for me would be a buying opportunity. And 19,850 or just 5, 10 points below that on this spot would be my stop loss. Maintaining a positive bias. And similarly, I think on the bank Nifty, again, the idea is to buy on dips closer to about 45,200. I think is a good entry point. Take a stop below 45,000, maybe 30, 40 points below that. And good chance that 45,700 could be revisited again. So the large cap indices are still doing pretty okay for me. But the idea is to buy on slight dips rather than buying immediately.
Okay, all right. What about individual stocks? What are we looking at this morning? Mitesh, what's on your list?
Morning, Sonia. I have 3 buy calls. IT is clearly something which is outperforming, and I have picked up Infosys. That's still showing signs of further upside traction. So buy here. Keep a stop below 1480. Look for targets of 1545. The second stock on my list is ICICI Bank, which I recommend buying with a stop at 980 or just below it. And our trading target of 1,015, 1,020 is what I'm looking at. And also a buy on NMDC, but this I would want to buy it on a mild decline. So The preferred buying zone is around 134. Keep a stop below 130 half. 142, 143 is the target area for me. And one sell call. MRF has gone into some kind of a profit booking mode. If you look at the hourly and the 2 hourly charts, the stock is now showing signs of a pullback. So sell here. 1,08,600 is the stop loss and 1,06,200 is the trading target.
Got it. All right. Thanks a lot for that, Mitesh. Sudarshan, coming across to you as well. What are your picks?
Well, Sun Pharma is a buy. The stock is making a consolidation, a bullish consolidation. So buy with a stop under 1120. You know, ITC started sleeping after that decent correction. That is now waking up. It's very interesting. A large cap like ITC may be now a buying opportunity. Buy with stop under 435. Dr. Reddy has a similar pattern as Sun Pharma, a small correction and then a very small consolidation. These consolidations usually lead to explosive moves. Buy with a stop under 5,500. And Alchem is my only intraday short. The stock is falling. It's in a downtrending channel, whatever you call it. It's an intraday short with a stop above 36.75.
Okay, all right. Thanks a lot, Sudarshan, for that. So those are a whole host of ideas. Hemang Jani is still with us, so let's get a couple of calls from him. Hemang, there's a new IPO opening today, RR Cable. What are your thoughts on that? Expected to be a good one. I mean, it's got a 7% market share, high growth business, over 30% compounded revenue growth in the last 3 years. Would you subscribe to this one?
Yeah, I definitely think so. It's a very good quality wire cable companies with a fair bit of balancing between the domestic market and export, a good amount of market share. And we've all seen how, the growth has been for that category over the last few years. The only thing is that if you have, sentiment which is dampened because of the way we have seen this correction, if this lasts a bit longer and if it's a bit deeper, that could dent the sentiment for the IPOs also. So I think that is something that we should bear in mind. But pure in terms of the business fundamentals and valuations, this is looking quite compelling.
All right, Hemang, what about cement? A couple of price increases have come about. Demand, though, it's a little bit mixed in terms of a feedback that we're getting. Your view on the space, because in East India, we've seen price increases, which is normally unheard in a monsoon season. I think a bigger trend will come in post-October. Your take?
Yeah, so I think Eastern region, we are hearing of about 5 to 7 rupees kind of an increase per bag. And what remains to be seen is that post-monsoon at a broader national level, what kind of price increase happens and what kind of numbers do we see. Overall, we continue to be positive on the space because the worst of the raw material pressure is over, and at the ground you're seeing stability, the construction, the ordering by the government that continues. So I think Ultratech definitely would be the top on the radar. And apart from that, I think some of the mid-cap names, maybe JK Lakshmi, NCL in the small cap, these are the names that we should be keeping on our radar for buying.
Okay, let's take a quick break. Just stay on, Hemang. We'll come back to you. When we come back, we'll also have the pre-opening rates. And Rajesh Palvia of Axis Securities will join in to discuss F&O strategies. Also, Mihir Vora, Director and Chief Investment Officer at Max Life Insurance, will join in at 9:20 to discuss an outlook on the market. Stay tuned. Welcome back. As promised, we have Rajesh Palvia, the Vice President, Technical and Derivatives Research at Axis Securities, who's joining us now to help us with some F&O cues. Rajesh, good morning. What are your thoughts on how to approach this rather volatile market, especially the broader markets? Do you think the sell-off there could continue? And what are the stocks that you're looking at today?
Good morning, Sonia. Yeah, there was a volatility in mid-cap as well as in small-cap space. Some liquidation activity was there in previous session. But broader market, if we analyze Nifty, Bank Nifty, both are still showing strength. And both the indices are holding up quite well above their, important support area on the near-term chart. Even on the derivative front, if we analyze the call put concentration, so most of the call put writers are still there at 19,900, 20,000 strike. That area is very important for the Nifty. Until Nifty not breaks below 19,900, trend is likely to remain on the bullish side. For Bank Nifty, 45,200, 300 zone is very important for the near-term trend. If we able to hold those levels, then Bank Nifty is also likely to show some buying interest, and we may see some buying in the banking stocks also. Even in the previous session, we have seen a couple of the banking stocks have recovered from their recent low. So Bank Nifty is also showing strength at this moment. We may see some bit of consolidation in Nifty. Maybe it could remain in some tight range. To play this behavior of Nifty, we are initiating here short straddle strategy to play for this weekly expiry. So we are having a premium of 70 rupees for 20,000 call option, and put is also trading around same level for 20,000 strikes. So we are initiating here 20,000 strike short straddle. So by doing this short straddle, we are pocketing around 140 rupees as a inflow of these premiums. So we'll sell a call option of 20,000 as well as put option of 20,000. So our break even would be above 20,000, 140 on the higher side, and on the downside, our losses will start below 19,860. So we are expecting that range bound behavior, and one can keep the stop loss of 190 for writing this premiums, and once this premium shrink to 80 rupees, one can book again profits. On the stocks front, we do expect that pharma space can continue for the more upside. Sun Pharma is looking very promising. The kind of breakout which we have witnessed in the earlier move, that is still intact, and the kind of buying interest was there in previous session. That shows that Sun Pharma can continue for the more upside. We are projecting target of 1185 to 1190. Keep stop loss of 1120. The second stock is from IT Pack, that is Infosys is looking very promising. Stock almost closed near to the day high in the previous session. Weekly chart is also indicating the strength. So we expect Infosys can exhibit further more upside towards 1530, 1540. Keep stop loss of 1485. And the third stock that we like from the banking space, that is HDFC Bank. Stock has recovered from its oversold trajectory, and the buying interest is there since last couple of weeks. We expect that HDFC Bank can give some support to the banking stocks, and possibly HDFC Bank can scale up to the level of 1680 to 1690. Keep your stop loss at around 1605.
Okay. Rajesh, good speaking with you, and good to get that perspective and those specific trades as well. Now, Rima is joining in with the momentumizer stock of the day. Rima, hi, morning.
Hi, good morning. The stock that I have on my radar is ITI Limited. The stock closed with a gain of about 12% yesterday. Even in Monday's trade, the stock was strong. In fact, in the last 2 days, the stock has seen a rally of close to about 30%, and it went on to hit a fresh 52-week high. So despite the weakness in the overall market yesterday, ITI held firm. Volumes too were unusually large over the last 2 days on this particular counter. The total traded quantity was 6x the 2-week average. Now, ITI is a PSU company. The government holding is close to about 90%. But if you look at the public shareholding, there is also a fund called the Special National Investment Fund, which appears to be quasi-government. That holds a 7.6% stake. So, X of that, the DII-FI holding in the company is absolutely negligible. One reason why the stock surged in trade over the last 2 days is that the company announced that they will be making their own branded laptops and micro PCs. So this has opened up a new revenue stream for the company, and that's what's driving the firmness in the stock. Back to you.
Okay, thanks a lot, Rima, for that. Well, I'm also watching out for M&M this morning. Remember, there was a fall that we saw yesterday after certain comments made by Nitin Gadkari talking about the possibility or requesting the finance minister to impose an additional 10% GST on diesel vehicles. Then there was a quick clarification as well, so the stock recovered. But HSBC has put out a note where they have a buy, and they've raised their target price on M&M to 1,800, which is well above where the current market price is. They talk about how the tractor business is very stable, despite the deficiency in the monsoon. So, how the tractor business, according to them, has surprised positively this year. However, they see a downside risk to the FY25 tractor growth because of the deficient monsoon. But the traction in the SUV business is something that does continue. They say that the SUV production has been stepped up. If you remember, there were long waiting periods earlier, but now they've stepped up production to meet the demand, and the production has now reached 38,000 units per month. And the stock is not richly valued at the moment, trading at around 16.5 times FY25 core EPS. So let's suppose that question to Hemang. Hemang, at this price of 1550 thereabouts, is the risk reward still favorable for a stock like M&M?
Yeah, surely, Sonia. I think both in terms of SUV, the way the numbers have been exceptionally good. Even the last month, they reported almost about 37,000, which was pretty much, in line with market expectations. The only point is that tractor last monthly numbers were not good. And if you have a bit of an issue in terms of the monsoon progress, then that could be a bit of a sentiment dampener. But overall, in terms of automotive tractor and valuation, I think Mahindra looks quite interesting. And if you see any correction, let's say about 3 to 5% over the next few days, surely it would be a good entry point.
Well, staying with the auto space, in fact, as I was mentioning, Transport Minister Nitin Gadkari, just hours after making the statement that he will seek additional GST on diesel engines, the minister tweeted saying that there is no such proposal. So there was a lot of back and forth. But now he says that there's no such proposal currently under active consideration by the government. So listen in to a whole host of auto manufacturers, what they said about this proposal, any impending additional tax and how it could hurt the industry. Listen in and we'll come back.
It was more of a push towards sustainability. So he was making out a case that the industry should do more work on sustainability. They should prefer more and more alternate fuels which are more sustainable.
But any additional taxation, how will that impact the auto industry, sir?
I think auto industry is already very, very heavily taxed. So definitely it will not be good for the auto industry if there is any additional tax.
I think what the minister said was more of a provocation, more of a message that I think the efforts have to be enhanced in this direction, and the country needs that. So I don't think, I don't think minister was serious really about it, but it was more of a provocation.
Yeah, I'm seeing out of the larger message. His larger message is that we have to move towards zero emission technology, right? And zero emission technology cannot be transitioned overnight. So there will always be a phase, which is this decade, I would say, which will be a mix of multiple powertrain. Certain powertrains would phase out, certain things will go a very steep ramp up. The end state has to be zero emission technology, which is an electric vehicle. I think his focus is that start transitioning fast towards electrification, and that's the message. If the objective is to bring down the overall pollution and overall CO2 emissions, I think private segment in passenger vehicles country is 90% of the demand, 90 to 95% demand. So it will be beneficial and aligned to the objective if government really considers giving and passing on the incentives also to the personal buyers.
Okay, well, that's some interesting sound bites coming in from the auto sector. Let's just sort of go back to the market. There's about 8 minutes to go for the market opening. Let's just have the indices up because things are settling down. We've got the rupee on your screen opening almost unchanged as compared to yesterday's close. And what else? You've got the Nifty with a 4-point change, almost unchanged like yesterday. Yesterday was like a flat day. Nothing happened in the Nifty while the broader market was going bonkers. And I think the other indices, let's have mid and small cap indices also up because that is where the real pain was. And we'll have that up in just a bit. Nothing there yet. And the small cap index should also come up on your screens, a bit from now. So that's the change. So small cap index is actually slightly higher by about 12 points, 12 and a half odd points or so. So will we see some stability emerge? That is the question that I think will be important. But, I mean, even before this entire sell-off, etc., happened yesterday, we spoke with Rahul Chadda, who manages about $1 billion of assets here in India. We spoke to him right around market opening yesterday, and he's with Mirae Asset Global Investments. His take on the broader market move, and he generally, without all that has happened since, sounded pretty cautious given the sharp up moves we've seen in that space. Listen in.
I think this move in mid-small caps up nearly 35 to 40% since last 6 months, when globally Fed is tightening, balance sheet is contracting. would be a bit worrisome. So again, that's something we've been doing since, I would say, last 2-3 months. Look at our mid-cap portfolio, some of these mid-cap names, whether it's hospitals, real estate, or other sectors. Look, we've owned them for 5-7 years, but look, valuations look kind of fairly full here. So what we're doing is top slicing probably 10-15% and moving that to large caps.
Move to large caps. Well, that was commentary that we got at the start of trade yesterday. But, Hemang, final question before we let you go. There are various reports that suggest that Indigo could be hit a little bit by Pratt & Whitney. It's been going on for the last few weeks or so. But clearly the market share gain is something that the street has been very, very excited about. However, this engine issue, you have crude prices that are moving up as well. How much of the good news is in the price? Would you be a buyer?
Nigel, I think this Pratt & Whitney thing has come as a bit of a surprise because currently they do have about 130 A30 Neos and depending upon how many of these engines are, have some issue and they have to be replaced, the entire thing will depend upon that. We have to bear in mind, Nigel, that this is happening at a time when you are heading into Diwali season and the winter holidays. So if you have a major issue in terms of the engine parts and the company is not able to find some replacement, it could affect the performance, for let's say 1 quarter or so. So that is something that we'll have to bear in mind.
Okay, well, let's do one thing. It's 9:10. Let's get some 9:10 calls going now. The market has settled in the red, so just be a bit cautious there because the headline index may be flat, but there could be some pressure beneath the surface. Sudarshan, what's the big call at 9:10?
Well, Dr. Reddy's is a buying opportunity with a stop under 5,500.
And Mitesh, what about you?
I'll pick a buy on Infosys, stop below 1480 here and target of 1545.
Mitesh, in your experience, just a word on the mid and small cap part of the market. We've been in a very strong uptrend, right? And yesterday was a very large cuts, 3.5% or 4% or so. How does market behavior pan out? Let's just for a moment say that there is no exogenous shock or there is nothing else which is wrong except the fact that maybe markets have run up too high, too fast. Is it possible you have stability and, the broader trend stays, which is on the way up, perhaps with the pace slowing down? Or typically, how does this play out?
So there can be two outcomes here, Prashant. One is that, you're right to point that the entire thing starts from the fact that the Nifty mid-cap index or the small-cap index, they've had about 40-45% kind of a rally in the last 4-5 months without any kind of significant correction. So one, I think, this movement which started yesterday, which could end up as a correction which starts, or it could end up as a consolidation. But in both the cases, I think, some pullback to the moving averages must happen. And then if the indices start breaking below those short-term, medium-term moving averages, then I think we are looking at a bigger correction. Else, this will end up as a consolidation. So the question, the way I'll answer it is that if they hold on to their 20-day, 50-day average area, the support zone kind of comes into play and the indices don't fall beyond that, then I think this will be a time-wise correction, and which could be significant because after 45-50% kind of rally, you will need a good amount of consolidation for the indices to have the strength for the next move. So one, either it's a time correction or it's a proper correction if we start trading below the 50-day averages.
Okay, all right. Thanks very much, Mitesh. Important. We'll come back to you in a bit. Thanks, Sudarshan, for joining in as well. Standout brokerage calls. Nimish looks at a whole range of reports which come in, and this is what he's picked out. Nimish, morning.
Morning, Prashant. So the today's standout is on Bata India. Citi has initiated a sell rating on the stock and a target price of 13.10, which is a potential 24% correction from the current level. So that's the call. Now, Bata is the largest footwear retailer, but the company has lost a market share, led by very, very poor performance. So they've seen a 0% revenue, growth CAGR over the last decade. In fact, the revenue CAGR for the last 5 years between FY19 to FY23 was just 4%. Which was the lowest among all the 4 listed footwear companies in India. In fact, while the valuations at 45 times FY25 price to earning looks attractive to Citi, they believe that if you just do the reverse DCF at current price, it implies a 17.5% growth for the next 10 years. Versus the last 10 years, the growth was just 11%. So while the street is excited with this deal, buzz about Adidas deal, but in terms of growth, it has lagged the peers, and hence a sell rating on Bata India with a target price of 1310.
Okay, thanks a lot for that. Target price is 1310 on Bata India, sell call there. But Rima is joining in. She has an update on Oracle and the impact that it could have, the read-through basically for the Indian IT sector. Rima, over to you.
Thanks so much for that. So Oracle Corp reported their numbers yesterday and the stock declined 13.5%. Its biggest single-day decline since March of 2002. The reason is disappointing numbers. Now, what the Indian investors are watching closely is Oracle's cloud revenue. Now, Oracle's cloud revenues grew by 30% in the quarter gone by, but this is slower than the previous 54% growth that they had in the quarter before that. Now, cloud has been the fastest growing segment for the Indian IT companies. Indian IT companies, with the help of these hyperscalers like Alphabet, Amazon, AWS, Oracle, etc., help enterprises, their clients, migrate to cloud and build products and applications and platforms on that cloud. So cloud is a very essential piece. If cloud is indeed slowing down, as Oracle numbers seem to suggest, then it could be a negative read-through for the Indian IT companies. Back to you.
Thanks a lot, Rima, for that. Well, we're just heading into the market opening, so let's brace ourselves for that. We have, as I was saying, there was a big fall that we saw in the mid-caps yesterday, so perhaps you want to be a little cautious in that arena. The Nifty for now is flat, but look at the mid-caps, down about 60-odd points. So straight off the bat, we've started with a small cut on the mid-cap index. The Bank Nifty as well is down about 50 points. Not looking too great there. The Nifty is holding up, so around that 19,970 mark, which is not a bad thing actually, just consolidating around those levels. But there are some steep losses that you're seeing in the mid-cap end, so I just want to point that out. Lemon Tree Hotels, and remember, these are stocks which have been big gainers this year, right? Lemon Tree Hotels is down about 2.5%. IRFC, Ircon, RVNL, HCC, Bank of Maharashtra, Vodafone Idea, NHPC, all of them are down anywhere between half to about 4-odd%. ITI is down almost about 4-odd% as well. The mid-cap index is now down 140 points, so it's getting worse as we speak. The percentage fall may not look like it's too much, but there are plenty of stocks that are down about 4 to 5-odd%. In fact, this entire PSU basket continues to correct, so just keep an eye out on that. MMTC, Ircon are your top losers. Then, of course, RVNL, ITI, Bata, as Nimesh was pointing out, there's a cautious call there. Chola Finance, Max Health, Jupiter Wagons is down about 4%, so that pocket not looking good. For the frontliners as well, the mood is a bit on the somber side. So now the Nifty is down almost about 30-odd points, led lower by IT stocks. I think it's just routine profit-taking is what you're seeing in the market.
Indeed, Sonia, it appears to be that. Now, in terms of top stocks that are moving around, Granules, that's the big winner actually from the broader markets. That's up close to 3%. Indiabulls Housing Finance is up close to 2.5%, and RBL Bank as well up more than 2%. So those are the part of the winners list. The other couple of stocks that are under pressure, you have Oracle Financial, as Rima told us. Commentary from the parent was not very encouraging, so that stock was down close to 13% overnight. We have Oracle Financial out here that's down close to 3.5%. Bata India as well is pulling back close to around 2.5%. And GNSPA, the smart meter play, well, that's down close to around 4% to kickstart trade. But earlier today, we had GMR Power who said that they won a large order, on the smart meter front itself. So they are up close to around 5% approximately. So good move is what we've seen out there. Lemon Tree, I think that's done a quick U-turn. It was down close to around 3%. Now it's up close to around 3%. So a big U-turn is what we're seeing out there. And NIIT, we had the management here on CNBC-TV18 yesterday. The stock, by the way, in the last 3 sessions is up more than 50%. It's up close to around 10% as we speak even today. Prashant.
It's a normal kind of a day after a very unusual day that we had yesterday. And that is good to see. I mean, that's the first starting point it's not a crazy kind of a open. The small cap index, let's actually put that index up. That is up 0.4% now. Actually almost a 0.5% gain in the small cap index. And you've got the mid cap index, which is slightly lower, but nothing. 0.1, 0.15% or so. Market breadth, now advances are putting some distance between them and declines. So 1,200 stocks are higher. And actually, it's almost 2:1 in advances to declines. This is very, very early days, but this is what's coming up. KEC is up 7% with there's an order win, and it's coming up as the largest volume traded name as well in the broader market. There is SJVN, which is up 4%. Cochin Shipyard. Some of these were down 10% yesterday. Cochin Shipyard is coming up with a 6% gain. So it's recovering 11.27, 11.28 in Cochin Shipyard. Indiabulls Housing Finance was down 10% yesterday. It is coming back up about 3%. IOL Chemicals is another one which is up 8%. RITES is coming up. So the first of these railway names which are all, without exception down 10-11% yesterday. RITES is coming up with a 4.5% gain, 536. BEML coming up with about a 3% pop. And, RBL Bank, which is up about 3% or so as well. So that's what's coming through. I think, you had the Nifty, the small cap index, which had closed just under its 20-day moving average. But with this 0.8% gain on the small cap index, we've come back to that average, the 20-day. The mid cap never got there. The mid cap index never got there. That's trading absolutely flat right now. So this is, the open. So I would say, actually the open is very, very good given the circumstances from yesterday's session. So the Nifty is down about 13 points. Like yesterday, that is a non-actor. Nothing really happened on the Nifty and the Bank Nifty yesterday. It was all in the broader market, broader universe. So that bears watching more than anything else. Mihir Vora is now joining us. He's Director and Chief Investment Officer at Max Life Insurance. Mihir, good to have you with us here. Thank you very much.
Always a pleasure.
What did you make of, yesterday and so much, I don't want to say water under the bridge, but a fair bit of speculation about what could have happened and what are the circumstances, etc., etc. What's your sense?
The speed at which the small caps had gone up over the last couple of months, something like this was waiting to happen, I would say. But I don't think it's anything unnatural or, unexpected because, stocks are up 50, 60, 80% in a month. So 4 or 5 or 10% correction is to be expected. And if you notice the numbers, frankly, it's not the institutions, neither the domestic institutions nor the foreign institutions who've been driving this segment in the last couple of months. It's mostly been the domestic retail and HNIs. And, when a certain stock goes down by, say, 5 or 10%, there is a follow-up liquidation of positions. It happens. I don't think it's very unusual. And yesterday's move is nothing to be worried about, I would say. It's just one of those things where there was a bit of a froth in certain stocks and spaces. Not unjustified probably, but maybe stocks running ahead of time, but just natural correction.
I think that's also very healthy for the market, right? To get these periodic natural corrections, get the froth out of the system. But do you think that this could have a longer runway, the correction you can't even call it a correction yet. It's been a one-day fall.
Correct.
But you think that it's time to get a bit cautious in the mid and small cap space now?
In general, yes. I have been, mentioning the fact that there is some froth being built up in specific segments of the mid-cap and small-cap space. More, I would say, in the small-cap space. And not most of it is news-based and fundamentals-based. So I would not say that there is no basis to the euphoria or the bullishness. But it's just that certain stocks are discounting too much far out into the future. So it's just a question of valuations rather than fundamental questions. I don't think we are still in a situation where really shady companies have been, doing the best or anything like that. Of course, there is a bunch of that. But so far, if you look at the top 100, 200, 300 stocks, they have been moving based on fundamentals. It's the valuations that are another question. And these kind of corrections probably bring some sanity back into the valuations.
Okay, all right. Hi, Mir. Good to have you in the studio. Mir, what do you make of this PSU theme that has played out? Because that's caught everyone by surprise. Everyone is saying these guys are not going to perform big time, in terms of a stock price. And now I don't know what they're factoring in terms of the forward earnings, the street that is. Some of them profitable, float is very, very limited. How are you all approaching the PSU theme? Have you all participated any of these themes? Either it's the banking names, the defense or the railways?
See, I'm not looking at it as a PSU theme.
Okay.
So if you notice, it's been stock specific and sector specific. For example, the OMCs have not moved.
Yeah.
Right? Because of their fundamentals. What has moved is stocks in the PSU banking space, improving asset quality. Defense, we all know the theme. Railway linked companies, because government spending has gone up. So I think it's been a sector and stock specific move rather than clubbing everything together into the PSU space move. Utilities have done well because there's a power shortage, right?
Correct.
So you have the coal producing companies, you have the utilities which are probably investing a lot into the renewable space. So there is company specific positives which are driving the stocks. I'm not clubbing everything as a PSU theme.
Okay, but which one of them has a better runway according to you? If you have to look at it. Because some of these stocks, they've run up quite a bit. And my fear is a couple of them, which, I just don't want to name them because I'm unnecessarily problems out there. But some of them have already run their distance, it seems, and the float is very limited.
Absolutely. So for institutions like us, it doesn't make sense to participate in those really low float companies. So we haven't, because even if we wanted to, we couldn't, right? But the larger ones are still liquid, and especially in the larger, some of the names like utilities, energy companies, the valuations are still quite okay.
Okay.
What about some of these spaces that have come back after a while? Technology, for example, large cap IT, even mid cap IT has come back. Many of these stocks are up 20%. Many of them are sitting at 52-week highs. Your thoughts?
That's because the US economy has done much better than expected. 3 or 4 months ago, the situation was probably a hard landing kind of a scenario was being painted. Now it looks like a softer kind of a landing scenario. So the fears about the US economy have not been as bad as expected, and that's the reason why you see the IT sector coming back.
But would you put money to work here?
I would, because IT sector after 22 has still underperformed. So while they're up from the bottom, valuations relative to the rest of the markets are still attractive. And if we are saying that a lot of the mid-cap and small-cap space looks expensive, then this is a good space.
So large cap is what you're looking at.
Large cap and financials. The financials are still not run up that much.
Let's just have the mid-cap and the small-cap index up on the screen. It's now up 1.2%, the index. So, that's the first rate, 12,600 on the Nifty small-cap index. And let's have if you can pull up the Nifty micro-cap index, right? That's the smallest of the lot in terms of market cap. That is up almost up 1.5%. So this is where bulk of the damage was, the small cap and micro cap index. And in that space, there is a buying which is coming back very, very clearly. You got what 3.5:1, 4:1 kind of advanced to decline ratio. So I want to say again, this is early days, but it's a regular kind of, we're used to 0.5%, 0.6% higher opening on the mid and small cap index. So it's a normal kind of open in that sense, and not a manic day like yesterday. I think by this time yesterday, maybe a little later, 10-15 minutes into the session yesterday, things had started to come off very sharply in that area. So this is not bad. Mir, you put out a post on Twitter, and I found it very interesting. You're saying that AUM in mid and small caps, and I'm just paraphrasing you, and I want you to explain that, is larger than AUM in large
cap funds. Yes.
Large cap funds?
Yes. The total AUM of...
is that true?
It is true. And,
what are the numbers? Give us if you remember the numbers.
So if I remember the numbers, mid plus small cap funds are about 4.2 lakh crores now.
Okay.
And large cap funds are probably about 60% of 70% of that. Pure large cap funds.
Okay. So pure large cap.
So if you look at the equity AUM of the MF industry,
okay,
the large cap fund AUM is about 14%. The flexi cap category AUM is about 15%.
Okay.
The mid plus small cap segment is around 12 plus 13%. So approximately 23%, which is larger than flexi cap, larger than large cap.
And mid
plus small is 23.
Yeah, but that will be even larger because mid cap funds would also put money in. Would they have exposure in large caps as well, or no? I mean, very little.
It can't be more than 35. It can't be more than 35% in any case because of the.
But it'll level out, right? Yeah. Because large cap.
But then you also need to count the mid and small cap exposure of the flexi cap funds, which is the largest category today.
So 23% mid and small, as compared to
14% pure large cap.
Pure large caps. Wow. And has this happened before, or is this?
I think it's the first time. And another statistic which was there in my previous tweet, if you had read that, is that the number of folios, mutual fund folios, in just small cap funds has for the first time exceeded the number of folios of large cap funds.
Wow.
Wow, that's interesting. Okay, so now we know where that froth is coming in from, right? But thank you so much for joining us, Mir. Appreciate your time here on CNBC-TV18. Thanks for joining us in the studio. Thanks. Let's slip into a quick break. When we come back, there is a new IPO opening up, which has gathered a lot of interest because the business is very strong. RR Kabul, the IPO opens today. Sri Gopal Kabra, the promoter and managing director, and Rajesh Jain, the chief financial officer at the company, will be with us. Later, we'll also be joined by Sanjeev Singhal, who's the chairman and managing director at Mazgaon Dock Shipbuilders, to discuss the company's business outlook. Welcome back to Bazaar Morning Call. Well, RR Kabel is on our radar. Their 1964 crore IPO opens today. So the IPO size is just a little under 2,000 crores. Out of this, 180 crores is a fresh issue, while about 1780 crores is via an offer for sale. Do note that the company has a very strong business. They've seen over 30% compounded growth in their revenues over the last 3 years. They have 7% market share in the cables and wires industry overall. And about 40% of their domestic business comes from two regions, which is Gujarat and Maharashtra. We have Sri Gopal Kabra, who's the promoter and managing director at RR Kabel, and Rajesh Jain, who's the chief financial officer at RR Kabel, joining us now. Gentlemen, thank you to both of you for joining us here. Mr. Rajesh, I want to start with you because, you know, just before we started the interview, you were telling us about how you have a large presence domestic business in the West region, both Maharashtra as well as in Gujarat, and you have overall 7% market share as well. What is the kind of growth that you are looking at, say, over the next 2 to 3 years, both in terms of market share as well as in terms of a top line?
So when we see, we are in wire and cable industry, which is fastest growing industry. Like if you see, India is growing in residential sector, infrastructure, we are doing very well. Economy is like moving from fossil fuel to green energy, from traditional vehicle to e-vehicle. So this industry is expected to grow at very high range. And if we see, like historically, we have grown more than 30% CAGR in last 3 years. So this is very promising sector, and we are doing good.
So 30% is something that you can replicate in the next 3-4 years as well, you think?
So like this will not be right to give any future statement, but yeah, we are doing very good if you see.
Mr. Kabra, talk to us a little bit about the business itself. I mean, you know, you're the promoter, you've seen this business grow over the decades. What is, and you are, you know, in the top 5 players in this segment, the cable and wires business. What kind of growth do you see, and what is the potential here as you see it? You also have a FMEG business. I mean, you have fans and you have lighting, etc. And there I was looking at numbers comparing to other players in the segment. I mean, you know, the polycabs and the others, etc. The FMEG business is relatively, as a percentage of your own business, slightly larger. So give us an outlook there as well.
See, basically, if you look into the growth perspective, I see a very bright future for this sector altogether. So total things are shifting. The future, whatever new thing is happening is electrical. Whether you go for EV charging, like see, a lot of investment coming to data center. Then logistics. See, after GST and demonetization, the logistics is a big investment. If you see last year, a record that India sold more commercial space than US. So everything we are breaking the records. So demand is plus. The main thing is the aspiration level of Indian today is different. See, like when suppose you will take my age, so we used to buy flat at the age of 50, 55. Today, average buying of flats is at the age of 37. So this will go up to 34%. And if you look at the way urbanization is happening, people are shifting from villages to city. Yeah. So that growth is there. Plus, if you look at today's paper, the highest demand is today for 2 BHK. It used to be 1 BHK, it was difficult for people to buy. Okay. But after COVID, the things are changed totally, and I see a very bright future for entire sector. Yes. In terms of our companies, what we achieved in
what percentage of the revenues are from the real estate segment?
So real estate wise, maybe 15-20%. Okay. But yeah, I tell you, real estate also, the 40% only goes to real estate, 60% goes for renovation. These are data we have. Right. So I was in Holland last 2-3 months before. So in Europe, it's almost 33% goes for real estate and 67% goes for renovation. So it's that we feel that real estate is doing well, the sector will do well. So it's the other way also. Even if real estate will little go slow, even then the demand will be there in the market. Yeah.
Okay. All right. Welcome, Mr. Kabra and Mr. Jain. And, you know, good timing is what you have picked because the sector is in focus and the stock market as well is vibrant. But let's get a couple of numbers out of you. What is your peak revenue potential? Last year you did around 5,500 crores. Now you're going to be raising some money as well. So how does your balance sheet look like post raising this money and the peak revenue potential? 2 numbers.
Yeah. So if we see, like we are raising 180 crores in the company, and out of that 136 crores will be used to repay our debts, and balance will be for general corporate purpose. Okay. From growth of point of view, if we see historically, we have grown at more than 30% CAGR, and this industry is promising. So we are expected to do well in the future.
No, so I just wanted to understand this. You did 5,500 crores. Yeah. Industry growth will be there. You will also have growth, which you would not want to comment on since you are in a bit of a silent period. But what is the peak potential with the current investment, current gross block? Can you do 7,000 crores? Can you do 8,000 crores, 9,000 crores? What is the number?
Yes, so we have capex plan for the coming 2 years where we have investment of almost 500 crores, majorly to expand our cable capacity and wire capacity.
Yes.
And even with the current capacity, we can grow by another 30% with the capacity utilization, doing better, and with the existing expansion what we come.
So you can do around 7,000 crores approximately with the current capacity that you have. And on that 500 crores, what is the asset turn?
So it is like almost 5 times on new investment.
So another 2,500 crores. So peak revenue potentials around 9,500 to 10,000 crores, keeping in mind the current capacity
and
plus the
future
expansion.
Sure.
Okay. So on that 9,000 crores, 10,000 crores, if you're saying you're putting fresh capex on board, do you have any kind of market share guidance? Currently, I think 7% is your overall market share. Can you get to double digits, say, by the end of FY24, FY25? Any targets that you're looking at?
So this industry is growing at 13 to 14% CAGR, industry as well. And if anyone grows above that average, then of course market share can be. Interestingly, like we started from 0 to 23 years back, and already we have reached to 5% overall market share. So we are doing very well.
But do you think this double-digit market share is something that you can attain, say, by the end of FY24? I mean, do you have any internal guidance?
It is not possible to comment on the market share or about our growth future.
And what about in the export market? What you were telling us that about 20% of your business, 25% of your business comes from there. What kind of growth have you seen up until now, and what's the expectation?
See, growth will be similar what we do in domestic and exports. It can be 1 or 2% more, sometimes in exports, sometimes in domestic. So it depends on the market. But best part is RR Kabel is that we have done exports in our own brand. So we are 92% exports. RR Kabel is there also is B2C. So we created brand not only just in India, but we created a brand globally. So today our brand is very respectable, and our exports is all to developers where the rules and regulations are very strict. So we are the only company which got 35 international approval for single factory. So that's also, and we are 100% REACH compliance, RH compliance. So we are very much focused in terms of quality, because we believe this wire and cable is product for the safety.
Right.
So safety
just wanted to ask you one more point on this market share before we move on. We track the listed companies, that's Polycab and KEI, and we know they have very ambitious plans, and they're very aggressive as well, in terms of grabbing market share. Do you think your market share will be at risk, or do you think you'll have similar aggression? You'll have done very well, as you said, 20 years, you'll have moved to that 5-7% market share. Is it at risk?
No. It's since sector is growing, we are doing very well.
So you'll be able to hold on to the market share.
Sure.
Mr. Jain, what about margins? Could you provide us with some trajectory? I think EBITDA margins are at about just under 6%.
Yeah.
What's over the next 2-3 years? How is this? Where should we see margins at?
So again, if we see, like we have done very well, and we have done done a high expenditure on expanding our base of electrician retailer. See, we have more than almost 298,000 registered electricians, which is the largest network. We have more than 102,000. More than 1 lakh retailers. So in that way, we have spent very highly in last 2 years, and we have made very good base for our future. If you see, we have 11 winning states where our market share is more than 9%. So in that way, we are expanding, and we are.
Will the margin profile improve?
So,
do you think?
So again, in margin, in FMEG last year we did 1 acquisition, so there was a bit pressure in my margins. But yeah, so
FMEG, I just want to understand, it's still a small portion, but when will that segment break even, you think?
So generally, FMEG for a company like us, the moment we cross 1,100 crore, 1,200 crores, it will be in positive.
Okay, and by when you think that would happen? Any kind of timeline that you're looking at?
So there we are planning, I think so, maybe next year.
By next year.
Fans, there are intense competition, right? I mean, I think the one segment which is seeing immense amount of competition is fans. That's what we heard from others.
Yeah. See, fan, we have immense competition, but we also need to understand there is tremendous future in fan. There is a lot of opportunities there because of the way the BLDC fan. See,
everybody is selling.
It's not because of mature market now. See, we need to understand how many people knows that whatever power consumption we do in India, 7% goes into fan. And if we save, say, 2/3 power, so India will save 3 to 4% power as a whole. So it's going to be a big achievement. And it's a payback period of BLDC fan is almost in 1 year. So now, initially, the wealthy people will go, then gradually go. So if you look into this fan replacement market comes, like see, LED, it's happened into LED. From CFL to LED, it was very fast change, like from landline to mobile. So I believe that from this regular fan to BLDC fan, journey will be different if everything goes well. So still technology need to be still evolve, it has to be more competitive, the price consciousness is there. things will change.
Mr. Jain, just to go back to that margin, I didn't get it. So you said that because of an acquisition, margins dipped. What is a steady state margin? Because I'm looking at previous years, you were at 8.5%.
Yeah.
Is that what you will go back to?
So if you see like advertising and sales promotion, my spend is almost double of the industry average. FMEG is the like new growing business, so it is one time of course. So overall we are doing good in terms of first we see we have very stable growth. Growth is there, quality is there, and the sector is also promising. So in that
I'm not asking you for a number for FY24 or 25, but do you think you will, in terms of a margin band, you will be 8%? You should go up to back above 8%. Is that a steady state kind of margin?
We can expect so. Yeah.
Just one more question on the exports, since it's 25% of your mix. Is there a margin difference between exports and domestic? If yes, what is the difference?
So what happens in export, we are exporting to developed country and we are doing in our brand. So initial our journey is very tough to stable and compete against international players. But once we have established our brand, once we have done so, but as of now, there are margin difference in export in compared to domestic, almost a difference of 3 to 4%.
3 to 4%, okay.
Yeah.
Just one last question from my end. Post this IPO, you will be debt-free, is it?
Not debt-free, but debt will be reduced. Like as of now, we have 500 crores of debts, which will be reduced by another 136.
130.
But most of my debts are working capital facility, which keep changing based on the growth of the business.
Okay, so the debt will go down by 136 crores.
Yeah.
Okay, Mr. Jain, Mr. Kabra, thank you very much, both of you, for coming to the studios. Good luck with the IPO, and we hope to speak with you again once the listing is done, and maybe you can give us specific numbers and targets as well. Thank you very much.
Thank
you. Okay, I think, I just want to take a quick look at what's happening on the broader markets. I mean, there's a turn. There's a tremendous turn which has happened. You've got the Nifty, which is the small cap index, which is down 1%, 0.8%. That's a massive turnaround from the time that we started this morning. And look at that. Very, very sharp. Not, started like this yesterday, I don't want to say, but it is a very sharp turn. Micro cap index, which was up 1.5%, it is down 1% on the day, which means from the day's high, the micro cap index is down 2.5%. The small cap index is down 1% on the day, which means the mid cap index is down 1% on the day, which means it's down 2% from the day's high. So these are sharp turns which we are seeing across the board. Market breadth is also turned. Wow. The advanced decline will come up on your screen. It was 2:1. It was almost 4:1 in favor of advances, and the crisscross has happened. We are 2:1 in favor of declines. So 1,400 stocks are lower, and you got about 650 stocks which are higher right now. So just a brief, quick look at the stocks which are turning around sharp. It's again the railway stocks. IRFC, Ircon, both are down 3.5%. Suzlon is down 5%. BSE is down 5.5%. We can have these names up quickly. Railtel is down 5%. Max Health is down 6%. Titagarh is coming up with a 7% cut. Texmaco Rail is coming up with about a 2.5% cut. NCC is down 2 3/4. Raymond is down 4%. Tube Investments was down 10% yesterday. It is down another 5%. Data Patterns is down 4%. So a lot of stuff coming into the mix now, and a complete sort of different look on the indices from the time that we started. These indices are down 2.5% depending on what you look at. This is the broader market we're talking about. The Nifty, which it was flat, it's down 20 points. So once again, like yesterday, not very much to comment specifically on what's happening on the benchmark Nifty. Nigel.
All right. Let's move on then, and let's focus on one such stock. That's Mascon Dock Shipbuilders. Well, that's in focus. Remember, that's been one of the big outperformers. It's up 200% in just 6 months. The company's order book now is at around 39,000 crore rupees. To discuss this and more, well, we're joined by Mr. Sanjeev Singhal, the Chairman and Managing Director at the company. Hi, Mr. Singhal. Good morning. Thanks so much for joining in. Well, I wanted to focus on a couple of aspects because your order book is close to around 39,000 crores odd, but the street wants to know visibility on that order book. So let's start off with the additional 3 more Scorpion submarines orders that we're waiting by for. What is the update out there? And what could be the total quantum of this particular order? You've already executed, I think, 5 to 6 submarines, and 3 more are in the offing. Go ahead, sir.
Yeah, with respect to the additional submarines, which is 3 in numbers, right now we are working with the Naval Group France for preparation of the build strategy, and we target to submit the build strategy by October this year. Subsequent to the submission of the build strategy and the budgetary quotation, the process will be taking place with respect to bureaucratic approvals, which will be at different stages. Difficult to predict the timelines right now, but we expect things to happen pretty fast.
So, do you think we'll hear about it in this fiscal?
Yeah, we are expecting this fiscal
closure. And what could be the rough number out there? It will be around 7,000 crores per submarine?
We will not be able to predict any kind of a number right now, because this would be something which we have to submit to the Navy, and then this would be subject to negotiations also. So we would not like to predict any numbers. What we can say is, yes, the last order for 6 submarines, which was a firm price of around 2011-2012, this was 20,000 crores for 6 number of submarines. So this is almost more than 10 years have elapsed in between. So there would be certain escalations, and we are working on the design changes and the specification changes which would be taking place for these additional submarines. So they will also have a cost implication.
Okay.
So the real
Mr.
numbers
Singhal,
we'll be able to discuss.
Got it. You don't want to share the numbers, but overall for the business, right? Earlier, I think you had given a guidance that there'll be a 10 to 12% growth in FY24. Do you stick by to that guidance? And on this base of around 8,000 crores of revenues, where do you think you will end the year?
Yeah, we continue to maintain our guidance with respect to around 12 to 15% increase in the top line for the year 23-24.
12 to 15%. So that's higher than what you had stated earlier, is it? Because earlier you spoke about 10 to 12%.
Yeah, as we proceed during the year, a greater clarity does emerge. I have been maintaining that we should not be compared on a quarter-to-quarter basis, because this is a different kind of industry with the lumpy executions and lumpy order books and long gestation periods. A quarter-to-quarter comparison would not be okay, but on a year-to-year basis, yes, certain comparisons can be done. And as we proceed more towards the year, a better clarity does emerge.
Mr. Singhal, just a couple of questions. Good morning, Prashant here. Could you tell us what is the order book now?
Yeah, we have an order book of around 39,000 crores as of 30th of June 23, which comprises primarily of 4 orders, which is the 15 Bravo missile destroyers, 4 in number. We have already delivered 2. One we are targeting for delivery this year, and the last one would be delivered sometime in 24-25. We have another order of 17 Alpha, which is 4 number of frigates, which we are targeting the delivery to start from next year onwards, and subsequently 1 stealth frigate each year. We also have a P-75 Scorpion submarines, which is 6 in numbers. We have already delivered 5. The 6th submarine we are targeting for delivery by end of this fiscal, or maybe early next year. In addition, we have received 1 smaller order of around 2,700 crores, which is with respect to medium refit and life certification of one of the earlier commissioned submarines, which has already had a life of 30 years, so which has come for life extension to us.
Right.
So these are the 4 orders primarily which we are taking.
Yeah. What about these? You have 6 submarine orders, which there was some talk around that.
Yeah, that is a new project, which is Project P-75I with the air independent propulsion system, for which we have submitted the price bid, technical and price bid on 1st of August in collaboration with TKMS Germany.
So that is the 40,000 crore total order, for which you submitted bids. A1 value published in 2018 was 43,000 crores. So there could be certain changes. We have already submitted the bid, and this would be now technically evaluated, and certain field evaluation trials would be there. By when will we hear something firm on this? When will this be awarded, in your opinion?
I believe that this would take around 18 months.
And typically this would go into, how many players are in the fray?
There are 2 bidders, Mazagon Shipbuilders in collaboration with TKMS Germany, and L&T in collaboration with Navantia Spain. So basically 2 bids are there. So both the bids will be evaluated, and field evaluation trials would be there. Then depending upon who is L1 and what negotiations take place, the order would be finalized on one of these.
Okay. All right. Hi, Mr. Singhal. I wanted to ask you another aspect. So clearly you're sitting on a good order book, 39,000 crores. So that's close to around 4 times your trailing revenues. So it appears that execution is going to be key from here on. I wanted to ask you, what is your current utilization levels that you're functioning at? Mid-50s?
For a shipyard kind of an industry, the utilization levels are very dicey. This cannot be decided because
you can give us a rough number, sir. A rough number.
A rough number in terms of capacity, I can say that we have a capacity of building 11 submarines simultaneously and 10 warships simultaneously. So we can construct 21 vessels at one go. They have to be at different stages of production. So corresponding to this, right now in hand, we are having 6 ships and we are having 3 submarines, 1 new build and 2 number of medium refits and life certifications. So one MRLC we are targeting for delivery December this year. So we will be having 2 submarines post-December.
Got it. Okay. So appears, if I just go by what you are telling us, you should be in approximately, 50-55% utilization levels, just going by the numbers that you're giving us in terms of quantity. When do you see this number head up? Because currently you're doing around 8,000 crores. The visibility in terms of execution, do you think by 2025, 2026, you can say may do 16,000 crores of revenues? Good order book, order inflows as well expected?
It will always depend upon the materialization of the orders. Yes, we do sense that there is a huge requirement of the Indian Navy. Next generation destroyers is being discussed, which would be 18 numbers, approximately 80,000 crores to be spread over 2 players. Similarly, there is a discussion with respect to 17 Bravo stealth frigates, another 18 numbers, that also to be distributed amongst 2 players. So Mazagon Dock Shipbuilders continues to be a very strong contender. Well, as far as destroyers are concerned, nobody else in India has constructed destroyers till date. Mazagon Dock Shipbuilders has a proven record of delivering destroyers successfully. In fact, between 2014 to 2022, if we consider, we have delivered 8 number of destroyers, which is approximately 1 destroyer every 20 months.
Mr. Singhal, sorry, got it. Just one. Sorry, we are a little out of time, so humor me. Just to take my colleague's point forward. Even if you were to win, say for example, the submarine order, right? There are 2 contenders, and if it were to come your way. Will there be significant accretion to your earnings? Because the current order book will get exhausted by FY27. So even if you were to win this this new order, will there be any significant change in earnings or earnings expectations?
Typically, the shipbuilding industry follows a S curve, where during the initial period from the award of the order, the value of production growth is on the lower side. And once the equipment build-up starts, then there is a significant growth in the value of production as well as revenue. So in the initial years, it is not likely to be exceptionally high. But yes, our current order book would be continuing for next 4 to 5 years. And any new orders, this would be adding to the yearly revenues.
So, Mr. Singhal, these upcoming RFPs for these next generation patrol boats, interceptor boats, corvettes, etc., can you tell us what is the potential quantum of these orders?
Total quantum, including the next generation destroyers, including the 17 Bravo, including the submarines, we see a potential market of approximately 250,000 crores with next generation corvettes, patrol vessels, and some smaller vessels. So the total requirement would be something around 250,000 crores, on which various shipyards would be competing. We see that for the big ticket orders, which is destroyers, which is frigates, and which is submarine, Mazagon Dock Shipbuilders continues to be a very, very strong contender.
Okay, so just some follow-ups here. 250,000 crores is the potential, you said, for these next generation vessels. In terms of a timeline, what are we looking at for the RFPs? Over and above this 40,000 crore order book that you have, what kind of visibility do you see from this pocket over the next, say, 1 to 2 years?
Like right now, what I said, the visibility is with respect to 3 number of additional submarines and P75I, 6 number of submarines where the price bids have been submitted. With respect to other orders, the clarity would be emerging with time, but yes, they are at different stages of approvals. So we expect maybe in next 6 to 12 months, a better visibility would be there with respect to the materializing of these orders.
Well, one final question before we let you go. The stock has been a big outperformer, and going by what you're saying, in the coming years, there's going to be a good revenue growth out here, and your margins, I think, are pretty much fixed. Have you heard anything about divestment on the company? Because the government of India still holds close to around 85% odd. Opportune time for them to sell. I mean, that's what market knowledge would say. But have you heard something?
Yeah, as per the SEBI mandate, we are required to 25% offloading is required. Right now, we are at 15%. We have time up to August 24. So it depends. And in case any exemptions are required, if the government is not interested in further divestment, then maybe some exemptions may be applied. But right now, we have time up to August 24.
But have you heard about something, say, in the next couple of months or this fiscal?
These discussions do continue. There are off and on, but the priorities keep on changing. So I would not be able to predict as to when MDL is listed as a priority for further disinvestment.
Okay, we'll leave it at that. Thanks a lot for joining us, and all the best with your business. That's Mazagon Dock. They've actually raised the revenue guidance for the full year. Earlier they had said they'll do about 10 to 12%. Now they're saying they expect a 12 to 15% growth in their revenues for FY24, and the stock actually is holding up in a falling market. So, that's one space that the street has definitely liked.
Sonia, take a look at the broader markets as well. I mean, if you can have the small cap index up, there is a recovery. So there's a fair bit going on while we focus on, companies. Look at the index, sharp move higher right at the word go, a sharp cut after that, and now things seem to be settling down. Slightly lower, I mean, on the small cap index and on the mid cap index as well. We're down 0.5%, which means that we are off the lows by about 1.75% or so there as well. Broader market breadth is also slightly negative, nothing large. It had gone to about 2:1 with on declines to advances, but you got 1,100 stocks lower and about 900 stocks which are so almost actually pretty much a 1:1 or so is where we are. Sonia.
Okay, so the other space that we're looking at is the logistics space, right? Gati is on our radar. For the month of August, the company's volume surged 24% year on year, and they're witnessing a very strong start to the pre-festive ordering. Piroj Shah Sarkari, who's the Managing Director and Chief Executive Officer at Gati Express and Supply Chains, is joining us now. Piroj Shah, thanks for being with us. I want to understand how the demand situation is panning out, because we're heading into, what could be one of the biggest festive seasons that we've seen in a very long time. But at the same time, consumption trends are indicating that there is a bit of a slowdown as well. What are you seeing in terms of demand trends? And this 24% volume growth that you've seen so far on a year-on-year basis, is this something that you can replicate in the quarters to come?
So first of all, thank you for having me on the show. Always a pleasure. Yes, we have seen a great August, and we are seeing a continual September. Basically, this is the pre-festive ramp up that the manufacturers do. They bring the goods closer to the consumers. And this indicates that the demand forecasted by the manufacturers is pretty robust for the ongoing season. For us at Gati, I think it's a culmination not just about the demand supply, but about the work that we have put in over the last 2 years on building our infrastructure. And that was very important, because unless we had proper infrastructure, we would not be able to meet the demand of our customers. And with all the new hubs that we have set in, whether it is in Delhi, Bombay, we just opened our new hub in Bangalore. And that's what enables us to kind of take on more business.
I want to understand a little bit about the potential in the e-commerce space, because, some of your peers, like Delivery, the new guys who've entered this space, are speaking about almost a 25 to 30% growth in the e-commerce segment. What is it as a percentage of your own business currently? How is the growth looking like over there?
So we are a B2B player. We do not play in the last mile B2C business. However, for B2B itself, e-commerce is now coming up as a new business, wherein the first mile of e-commerce, which is from the vendors to the warehouses, is growing leaps and bounds. And as far as we are concerned at Gati, we do not verticalize ourselves in e-com or as an industry. We do it by size of business. So we have key accounts, SME and small. And our key accounts is what is getting us the largest growth in the last couple of months, which includes the e-commerce business.
All right. Hi, Mr. Sarkari. Thanks so much for joining in. Could you give us a sense in terms of pricing? How has that been? From here on, have you all moved pricing around? Point number one. Point number two, what does it mean in terms of margins? I think you were guiding for double-digit margins. Are you getting there?
Yeah. So in our business, which is express logistics, yield is an outcome of also the business that we do. We have what we call zonal deliveries and national deliveries. And as warehousing is getting closer to the customers, the zonal deliveries are increasing and therefore yields are coming down. However, yields coming down does not necessarily mean that profitability goes down because the cost also reduces in tandem with the distances. So yes, yields are falling for us because we are getting more and more of the zonal business. But from a profitability perspective, we are on track.
Okay, so you're on track from a profitability perspective. Got that. So I didn't get what the outlook is as far as the margins are concerned. What is the number that you're looking at? I think I missed that.
So we have already put out that in 3 years, we'll be 3,000 crores with 10 to 12% EBITDA. And
okay, that's in 3 years, sir. But in the near term, what will it be? How do you see that panning out? Say for FY24, what will it be? Particularly on the margin front.
So as we grow our top line, we will leverage our fixed costs and our margins will continuously grow to our end goal of 10 to 12%.
Okay, 10 to 12% is your 3-year goal, right?
Yes.
Okay, and by FY24, what are you looking at by the end of FY24?
We don't want to give out any number for FY24 right now, but we will see growth coming quarter by quarter.
Okay, just one final question. Can you tell us about these hubs that you spoke about, right? You're planning to start operations in Q2 and Q3. What is the monetary benefit of these hubs, whether it's in Nagpur, Mumbai, even in Bangalore?
So basically, it enables us to give better service to our customers and take more business from them and therefore also optimize our costs. So in turn, both growth of top line as well as bottom line as we build out our infrastructure. And we've seen this happen every time we open a new hub in a zone, which was in Delhi, Nagpur, Guwahati, Bombay, and now we just opened our new hub in Bangalore.
Okay, all right. Thanks so much, sir, for stopping by and filling us in with all those details. We'll hold you on that number, 2026, 3,000 crores with 10 to 12% margins. Appreciate you joining in and speaking to us here on CNBC-TV18. Well, the Nifty is more or less flattish, so let's hop across to Mitesh Thakkar to ask him his view on the index, as well as a couple of stocks. Mitesh, what do you make of the first hour session?
So, Nigel, I think the first hour has been very quiet compared to the moment which we saw yesterday. And I maintain this stand that, 19,850 remains the key level for me to watch. If that doesn't get taken out, I think, we'll see some kind of bounce back to about 20,050, 20,100. And that could be a good exit opportunity. So keep these levels in mind. On the stock side, a sell on PEL or Piramal Enterprises is what I recommend. Keep the stop just around days high of 1,075 and a target of 1,010 can be looked at. And Petronet has come to the buying zone, which I would prefer buying at. So it's a buy with a stop at 230 for targets of 245.
All right. Thanks a lot for that, Mitesh. Appreciate your thoughts. That's on the technicals of the market. Overall, don't lose sight of what's happening in mid-caps. Mid-caps are now down 300 points. Let's take a quick break. Manisha Gupta will focus on the commodity markets in just a bit. Do stay tuned in. Welcome back. Let's get a quick handle on what's happening in the world of commodities. Brent crude is actually at a 10-month high. It's hit that $92 a barrel mark, so headwind for our markets. But Manisha is here to give us the latest on all of that. Manisha, over to you.
Thank you so much for that, Sonia. Well, yes, $92 a barrel is a new 10-month highs for the crude oil prices. We have seen 2% of gains overnight, and with that, we are 9% on the higher side on a month-on-month basis as well. The crude price is also taking a lot of support from the supply concerns that we have seen into the markets. We already have been reacting to Saudi Arabia and Russia cutting output by 1.3 million barrels per day till the end of 2023. Add to that the fact that we also have seen concerns come in from Libya, which has shut 4 east export terminals due to a storm. And then there are concerns also coming in from Kazakhstan, which also has cut output going forward. That is because of the maintenance issues there. We also saw an OPEC report yesterday, which is still talking about a strong demand in this year and the next as well. For 2024, they're looking at a target of around 2.25 million barrels per day of a global demand growth coming in. Now, when you look at 2.25 and then you compare that to the EIA report that we have seen, that also shows a 2024 demand increase, but that is barely by about 1.7 million barrels per day, while OPEC is talking about 2.25. But when you look at the last 2 or 3 years, we have seen constant gains come in for the global demand growth, and that is something that the street will wait out for on what IEA also has to take. In the meanwhile, US is going to be an important number to watch out for. Here as well, we have seen a constant increase in production, even if by smaller margins, but from 2022 to where we are right now and the expectations of next year, which would be a record high. That's the kind of supplies that the street is looking at. As I said, we are also watching out for more data to come in. This is a report card in the meanwhile on what the crude prices have done in this year. We started the year with 82 and then saw a sharp decline up to $71 a barrel as well in the month of June, holding at a 10-month highs right now, 2023 highs as well, $92 a barrel. It has been very strong gains in last couple of months, one-way rally. Actually, in last 2 months, we have seen the prices gain up by nearly 18%, and the markets do anticipate the momentum to continue on the higher side. This is what the markets are anticipating or looking forward to today. You have IEA numbers coming in and the US inflation data that would set course for the next direction.
All right, thanks a lot for that. Well, Bata is one stock that is actually under pressure right now. So just pull up the Bata stock. Nimesh earlier on in our standout brokerage corner had highlighted that this stock could be under pressure. Nimesh, over to you.
Thanks, Sonia. So, as you rightly pointed out, stock down 2% on the back of the Citi note. So they've initiated a sell rating on the stock with a target price of 31.10. A potential 24% downside from current levels. Now, Bata is the largest footwear retailer in India, but the growth has been missing for them. In fact, they've lost market share as well. So it's been a zero volume CAGR over the past decade. That's according to the Citi note. In fact, if you look at the revenue CAGR for the last 5 years, it was only 4% versus which was the lowest among the 4 listed entities in India in that space. While the valuation at 45 times FY25 price to earning looks attractive to Citi, they believe that the reverse DCF implies a 17.5% revenue CAGR for the next 10 years, whereas in the past decade, they've reported just 11% CAGR. So while the street is excited about the possible tie-up with Adidas, which we've reported as well, the company has been losing market share. That's been the biggest worry for Citi, and hence a sell rating with a target price of 31.10 on Bata India.
All right, thanks a lot for that. Well, KEC International and GMR Power are also buzzing in trade. Vivek is tracking them. Vivek, over to you.
Well, that's right. Both the stocks are buzzing after, order wins have come through. So KEC International, the company has secured orders of over 1,000 crore across various business segments. Now, talking about the civil segment, the company has received an order to build a data center in Western India and also to set up a manufacturing facility for a global FMCG major in South India. In the transmission as well as the distribution segment, the company has got a transmission line order as well as the supply of tower hardware as well as other infra in the Americas geography. Now, talking about GMR Power, one more order win has come into the company's kitty. This time around, the company has received the letter of award for a smart metering project worth over 2,470 crore in the state of Uttar Pradesh.
All right, thanks a lot for that. So that's KEC International up about 5%. But I think the big macro development, which is a big positive for our markets, is inflation falling to 6.83%. That was the best surprise for the economy and the markets. On the other side of the break, in our special segment, it's the economy. Lata will speak with Shantanu Sengupta, the economist from Goldman Sachs, to discuss the details on the inflation data. Stay tuned.